So we're going to get started with our panel. The title of the panel is The Future of the Bot Economy, and our moderator is Quintus Kilbourn. Quintus is a Flashbot steward. Quintus, I will let you introduce your panelists.
Sounds good. Hello, everyone. I think the first thing to say is we could maybe all have been on the panel, given the numbers. So I think we should just have a broader conversation today. I think we'll start on stage and then open it up. So I will put you guys in boxes, and then I will allow you to redefine my box after I put it in. But maybe like defining 3 archetypes for this conversation. I have Kollan next to me, who is one of the co-founders at MEV-SBC and has been thinking a lot about sort of how markets can shape decisions and like how we govern ourselves. And Phil is, I think maybe I shouldn't like think about timelines, but in my mind, Phil's like a very crypto OG kind of figure. Thinks a lot about the original crypto ideals of decentralizing power, of empowering like sort of individuals. And Ciamac is sort of an expert in markets and has been studying traditional like TradFi, or like what the rest of the world just called, I guess, financial markets for a long time, and is an expert here. And I think what's interesting is when you bring together these 3 kinds of folks is if you look at the origins of crypto with Bitcoin, maybe even before, but if we start there, a lot of the focus was on decentralizing power and maybe moving away from the like profit incentives and how that like shaped the world around us. But basically, since that inception point, crypto has been mostly about markets. Proof of stake is a market, proof of work is a market. We have fee markets, we have markets built on the chain, and really these markets shape a lot of the outcomes that we care about. And our design of these markets really impacts how the power structures that we're trying to change shape out. And I think, if we look at decision markets, that's a decision, or that's to me, an acknowledgement that markets are very powerful in shaping decisions and shaping outcomes, and we'd rather make that explicit and try to harness that. And so I think we'll try to sort of navigate this intersection of topics. But yeah, now that I've given like put you guys in boxes, I don't know if you want to add anything maybe to my introduction.
No, I mean, like I really think that first, I'm Kollan, co-founder of MEV-SBC, like you said. I think that being able to experiment in this realm has been really powerful, and it's been really engaging for me. And I don't want to ever lose that with people, like in this industry. And I hope that we don't go like full TradFi with a lot of that stuff, and we don't lose that initial inspiration, because that I believe is a systemic risk right now with equities and securities coming on chain and having this KYC'd environment. There's reasons that stuff exists, but I think that this is where we get to do the grand experiment with internet capital markets and the globalized economy in a way that maybe has been gatekept before, and we need to not throw the baby out with the bathwater with TradFi, which I think we've done a lot. And maybe we have to swing back, the pendulum swinging back in this case. But yeah, I'm really excited about what's going on in the industry right now. I'm excited about the maturation of it, but I still don't want to ever like lose that core ethos there. So I'm still with Phil over here that there's a lot that can be done and derived from all of this stuff, and still excited about what's going on in this industry.
Yeah, I love it when my, I guess, box is how long I've been doing something and there's nothing else to say about me. But
very senior.
It's an uncredentialed space, so I guess it's perfect. I don't know, I echo what Kollan said. I mean, I think one of the things I said maybe like a year ago on Twitter when someone was kind of facetiously saying that maybe there's not much of a difference between crypto and TradFi was something like, okay, but where do you see like, a bunch of like 25-year-old kids and like PhD students deciding the future of like a large financial system? Do they have that seminar at Goldman Sachs? And maybe I just missed the invitation. So I do think it's very valuable that you all are here, and encourage people to go to the mic and participate in this as well, because we do need to keep this alive. Otherwise, my box, I don't know. I feel like I'm an artist, a philosopher, kind of a technologist. Is that a box? I don't like boxes.
I think it's a very, very big box with round
We're people,
corners.
not boxes, Quintus.
That's true. I'm a structured person.
Yeah, fair.
Ciamac, I don't know if you want to qualify my box before I hop to the first question.
I think that was fine. So my background is mainly quantitative finance, thinking about things like quantitative trading, market microstructure, and so on. I think from my perspective, the most exciting thing about having worked in DeFi for 3 or 4 years now is just the willingness to try new things. I mean, I've sort of, a number of people have said, something like an automated market maker, right? Seems like that won't work, right? Like, a whole bunch of reasons why, and especially as an academic, I'm very skeptical of everything. But, sometimes you try some things and they work and you update your prior. And, even more basic things like, say, frequent batch auctions, like something that's, extensively been discussed, but in the TradFi world, for various reasons, you just can't try these things. So that kind of experimentation has been what's been most exciting to me.
Excellent. Okay, Sarah, I can't see the time, so you'll just shout at me when you have 5 minutes left. Very good. Okay, so first question, maybe Phil, since I've put you in this box as the crypto OG, how would you describe some of the initial ideals that pulled you into this crypto movement, and how do you think that some of the views on how things would play out were validated or maybe incorrect at the sort of beginning point? Yeah.
Oh man, I could spend so much time on this question, but I'll try to be quick out of respect. Yeah. So I think for me, getting into crypto in the first place, I mean, it was kind of like a religious awakening, and people say that. I hate to make it all cheesy, but I basically read Satoshi's white paper, and I was kind of pilled pretty instantly. Why? What values brought me there? I think there's a few things. One is I was a big part of, at least maybe not a big part of it, a big part of my life was kind of the Occupy Wall Street movement. Late in high school, I grew up in the New York City area. A lot of people there work in TradFi. So I had a kind of front row view, including my dad worked on Wall Street for a long time as well. And it always kind of bothered me that so much power was concentrated in such a small place. That always seemed a little bit just nonsensical to me. And also kind of just the way things worked and seeing it. So I've always cared a lot about power distribution and what is or isn't, maybe fair is not the right word, but what does or doesn't kind of feel good for kind of the world and a broader base of humans. And I don't think we've kind of achieved that. And I think where I grew up is kind of the epicenter of the failures to do that. The other piece was a kind of privacy and robustness. So I always cared a lot about privacy. I was kind of a gray hat hacker when I was a kid just because I loved the stuff. And I think governments generally sometimes can go too far. So in that view, I think we need more privacy rather than less in today's status quo. So I was building a decentralized WikiLeaks actually before I read the white paper on very old school technologies. Shout out Freenet, shout out Tor, shout out, what else were we using? The BitTorrent DHT, like a bunch of stuff like that. And we were running into a bunch of technical problems. And the Bitcoin white paper both cleanly solved that and gave me something I'd lost hope in Occupy Wall Street, which was a path that didn't go through the banks that might actually work. And how do I feel about them today? Maybe ask me in a year since I've already ranted enough. But I still feel good, broadly. I still feel good.
Okay, and then maybe a very different perspective. Professor, you've been studying the traditional markets for a long time, and now you're, I think, probably one of the leading people understanding the microstructure in DeFi. You mentioned AMMs as one interesting thing that maybe challenges what we believed before to be possible. But are there sort of like larger structural differences you think in crypto? And I think one maybe angle I'd be curious your perspective on is, if you look at proof of stake or something like that, there's a lot of power that is influenced by these markets, or the control of the network is often influenced by these kinds of markets. Do you see these as like new and interesting, or do you think there's some sort of like fundamental properties that carry through all markets and the differences are sort of negligible in some sense?
No, I think it's pretty new and interesting. I think traditional structures are usually, you may have different pieces in a system, but they're all operated by an entity. And those entities, if they get sufficient power, they'll start extracting monopoly rent. And I think with decentralized protocols, you start to set up like credibly neutral systems where no one can do that. So I think that's fundamentally different. I think the big picture challenge, though, is you usually get efficiency losses. It's usually like harder to do it. The way you get people to behave in the system is essentially you have to bribe them, and that comes from you have to pay validators, for example, and that comes from has to come from somewhere. So I think it's kind of a fundamentally a new model, but at least putting aside the sort of the philosophical, political aspects and just kind of focusing on like the economic aspects, there's trade-offs. There's like kind of maybe efficiency versus kind of monopoly protection would be the biggest picture.
Great. Okay. Then the last piece of context I think we need, Kollan. What is the decision market? Can you explain what you're doing?
Yeah. I mean, the way that we use it, taking Robin Hanson's work on vote on values but bet on beliefs, he used reference in there for company organization and then like global organization for governments, and we went the company route, which is asset-based pricing for these things. So we have no settlement period or evaluation. It's just the thesis that if you keep making good decisions over time, that asset price continues to go up. So you don't need to evaluate. You'll destroy value or build value. So what we do is we run a 3-day time-weighted average price market where we create conditional tokens, so yes or no tokens from the base asset, and you trade them with their US dollar pair. And so if this decision were to be made, is this going to drive the asset price up? If it wasn't to be made, will it drive it down? Conversely, and people participate in those markets at the end of the 3-day period. That gets triggered, and then we execute instructions on chain, or people go out in the real world, sign legal documents, do those kinds of things to operate their business right now. And that's how we've classified it, and that's how we use decision markets today.
Sweet. Okay. The first, I think, interesting topic to discuss here is how market design influences sort of the power structures of the system. I think we were standing outside talking about some of the challenges that decision markets and many of these new markets face, and that there's, you need people with capital to come in, you need people with specialized skill sets to come in and power these systems. And a lot of crypto markets have sort of been bootstrapped just by speculation. But in the longer time horizon, we see actors with capital and the ability to like price things while having a lot of influence, and often like having like large stakes in new DEXs that launch because you need some sort of incentive alignment. So I guess I'm curious, maybe Ciamac for you, but really for the whole panel, like, how does market design influence ultimate, or maybe even before that, does market design influence who, the like distribution of control or activity across different actors, and what are the levers we have there? And I think both of you have some experience on how that has played out.
I think 100% it does. I think maybe a simple example where gets a lot of discussion in recent times is this idea of delaying takes, right? The idea being that you want to protect people who are providing liquidity, who are making markets, by giving them the chance to cancel before someone picks off a stale price. When you do that, on the one hand, you're benefiting people. You're certainly benefiting market makers. And downstream of that, you're benefiting uninformed retail kind of traders because they get better prices. But the flip side, tighter prices, I should say. But the flip side is you're disadvantaging these informed traders, and maybe that's going to create disincentives for them to do their research and get the prices into the market. Maybe there'll be less price discovery and so on. So that's a very clear decision that will benefit one set of people. Maybe that's a trade-off you want to make, but there is there has to be a trade-off. And I think to build on another point that you had, you mentioned in crypto that it's sort of speculation has sort of kind of started the flywheel here. And I kind of think that's not sustainable. because healthy markets, you need two types of actors. You need people who are very, let's call them like very kind of short-term profit motivated, who are actively forecasting prices and so on, these informed traders. But if those are the only people you have, there'll be no trading. They won't trade with each other, right? So you need people who are trading for other reasons also, for, and if the reason is speculation, right? At some level, if speculation is informed, then they're an informed trader, and that's the other bucket, right? If it's uninformed, then it's kind of an entertainment product, and I think there's a limit for how much you're not going to get a serious financial structure based on entertainment. Maybe you'll get sports betting or something, but that's kind of it, right? And so you need, I think, for these markets to bootstrap and evolve, you need people to be using them for things like hedging and like long-term investing and so on, and that would be where the next evolution has to be.
Yeah, I think there's probably many dimensions on which you can slice this question. I will take it in a slightly different one than Ciamac. I don't know. Market design obviously matters a lot. I think there's also a fallacy in crypto that like, hey, we designed the market and the world hasn't changed the way we've wanted it to, which I feel is almost like technologically determinist in a way. Like I'm gonna kind of troll Kollan here because sometimes I feel the futurarchy prediction market people I talk to are very much in this bucket. I think the truth is like a little more nuanced. Like there are some things that are fixed. For example, the things people want to do, how many of them are profit motivated versus not. And then there are some like knobs we can turn as technologists. It's somewhat difficult, or market designers or whatever we're doing. And it's somewhat difficult to predict the outcome, which doesn't mean we shouldn't try. It means maybe we should be thoughtful. And not get frustrated when we like turn a knob and it's not exactly what we want. To make it concrete, we have some experience with this at Flashbots, right? Like we want a geo-decentralized builder market. We want a very distributed set of computations in MEV. These seem like ideal market properties to us as technology people, like building robust systems. But if we just spec something out on paper and it has these perfect properties, it doesn't mean people will actually use it or it'll make the changes in the world that we want. So I do think it matters a lot. Yes, it matters a lot to outcomes, but there's also like a very subtle process of kind of designing and changing the world for it that you have to be a little gentle with.
Yeah, and those are hard choices to make because it's like lasting impact and change can be very arduous in many cases when the momentum's there and you want to tweak something here or there and then you don't get to see, the impact until it happens, and then by then the train's out the station. Yeah, and I think that there's a pragmatic approach, right? Like if we built the casino and that's all the casino is, then that's how everybody's going to treat it, and that'd be very destructive for my perspective on what crypto could be, in all of this stuff. So we've seen a lot of that. I mean, meme coins, NFTs, this stuff has come. And, we are in an environment across the globe where it seems like the divergence between the expected lifestyles of individuals and their current lifestyles, so they go into risk-on behavior, so they may go into casino stuff and alternative assets, which is interesting in itself, but if you build that and continue to dedicate resources to that and people that are building that, then that's kind of what you get. And then you don't get to run any of the experiments here. But I think that there's a pragmatism to all of it that, I think we embody at MetaDAO is it's not about what the theory says, it's how people actually use it. And for us, we think about the capital structure of the initial funding of these companies very intensely, because if you don't have a long-term perspective on funding a startup, then what has happened to us is teams come in, they don't build the product at the rate that they're going to because startups have all these issues. And we've protected the treasury under this mechanism, but it means that there's a backstop there. So people come in and then they create a proposal to liquidate the treasury. And so we've created this system that's this stored USDC value that people can come and raid, and it's programmatically designed to do that. So we had to go back to the drawing board and go out and find that sticky capital, find the long-term motivated capital that's willing to underwrite these deals, not from a trading capacity, but from fundamentals of startup, and that's been quite interesting to see how that has reshaped the market structure, so we don't have people trying to run a raid on the treasury, and retail is participating at like 40 to 50% of the total funds raised. So it's quite interesting to like meet that versus your expectation where you're like, listen, this can be global fundraising, and then the people that show up are like, oh, day 2, we want buybacks, and then by end of month 1, I want to liquidate the treasury.
I think maybe one thing that's coming out, especially from Phil and Kollan, is sort of the limitations of markets, right? And definitely, like if not designed well, we end up with a lot of these dynamics where there's a lot of short-term revenue pressure on young companies, or maybe from like a more of like a power structure perspective, we have we don't really have the ability to do like one person, one vote, unless you go the KYC direction. And so you end up with like power being sort of proportional to capital, or maybe to like latency and like low latency access in the market. And I guess maybe there's like two sides to two related questions I have. One is sort of to what extent are we just like delivered or like exposed to the markets, and we have to deal with the reality that like these kinds of markets, either explicit or implicit, do shape how the world works. And on the other hand, like how much capability do we have to harness these markets and shape them? And like you were giving this example, you were saying that like you guys had a problem, and by just changing the way that your markets work, you were able to change the kind of actors who are participating. So yeah, to what degree are we delivered and at the mercy of markets, and to what degree can we harness them, and what are the limitations there?
Yeah. I mean, I think it's interesting. I'll go on a slight tangent. Matt Levine was talking about like memeing into existence GameStop, and the fact that like they've built so much value that now GameStop can go out and solicit a high value CEO and maybe turn around the company. So like it's not to say that like any of this stuff is completely absurd, because like people have memed into existence the capability to undertake something like that. So it does show the power of the markets, but it also shows the power of the individuals that coordinate around these things, and this is a coordination tool, is my firm belief there. So I think that, like there are these elements that we have control over, and then there's like what this is at a fundamental base unit, right? Like you have all this information distilled into a single data point, and there's something elegant and beautiful about that, about market, like what markets do, and the participants that come into all of that stuff. So I think there's just so much open space to continue to discover what these things are and the power that they have. And capital seems to be one of those things that, I mean, you have great capital allocators in the United States. We can take issue with how all that like fundamentally works and what people are allowed to do with it and not. But, like we get SpaceX for something like that. We get Starlink. We get these things that like impact people on a global scale. I was thinking about this the other day, and then I'll stop, but never in human history have you like flipped a switch and everybody in the world had an advanced technology like LLMs. I tried to think back on the internet, but that was slow adoption overall. Industrialization occurred at different times, but like this happened, and there's something to say about that. I don't know what it is, but it's quite interesting.
I want to follow up on that a little bit. So it's interesting you mentioned LLMs, because the two dominant providers of LLMs, Anthropic and OpenAI, are not public companies, right? And so I'm very sympathetic towards decision markets and MetaDAO and this idea of having real-time feedback through markets and prices. But separately, you observe this trend where private companies want to stay private. They don't want that signal. The signal is distracting, right? At the same time, you have investors like, let's say, Stanford University Endowment or whatever, right? They also don't want the signal. They invest in private equity. Why do they like private equity? Because they don't get mark to market. They don't know that they're losing money when they're losing money, right? So how do we reconcile the desire for opaqueness in the market with mechanisms which are inherently transparent? Is it just we have the wrong markets, or?
Yeah, I mean, I think it's quite interesting. I think what we do pragmatically is defer far more to operators than like people believe in like this idealistic implementation of futarchy, right? Like we've said, like Robin is a great theory crafter. He's probably not the best practical applicator out there. And what we need to do right now at this stage is like few Tarky markets are maybe 80 IQ. They know enough not to burn $220 million in the treasury, but maybe not more than that right now. And maybe you have to see these things evolve to the point where you do get that. And I sympathize with that too, where like there's still capital allocation going on. And in less legible or credible environments, for example, we pick up a lot of Indian startup developers that aren't based in San Francisco or can't get over to San Francisco. Like, there's a reason that venture capital dollars don't go over there, or private equity isn't as big over there. And so you could create an environment where these people have the opportunity where you've de-risked the overall investment, and maybe that's the trade-off that you're willing to make. Maybe this does not fit well within a sufficiently operating entity, but it does fit well in one that isn't, where you do have these problems with, you're friends with the board, but you're continually draining the quarterly, revenue on any of this stuff. So I think that there's probably like a trade-off there in a spectrum. I don't think any of this is binary.
I feel like public markets and opacity, aka privacy, was mentioned, and so I feel like you have to say something, Phil.
What a prompt. No, I mean, I mostly agree with everything that's been said. I wonder if like the first thing when I, double-clicked on the MetaDAO idea, maybe like, I don't know, 12 hours ago or something like that, was, hey, this might be interesting, but in a more limited form, like something like issuing a bond or something where you want someone to take a bet on the company, but you may not stake necessarily the whole decision process. That might be some sort of middle ground. Because I do think, opacity it can be useful. Usually, especially in the early stages of a company or building a market, the world doesn't actually understand what you're doing. And like, if you let them make decisions for you externally, it probably will be worse. So yeah, I don't know what the broader implications of all that are on building markets. Maybe we need privacy to have some form of opacity on digital markets. Is that what you want me to say, Quintus?
No, I was just curious.
Yeah.
I would love to hear what you have to say, but could you say it in the microphone? And why? Oh, Sarah has a microphone.
Thank you. Loud. I have a question related to the earlier point about companies in desire to stay private longer and what that actually means for market feedback, XYZ. We've already seen, especially with Anthropic, because everybody wanted Anthropic secondaries, we've seen a growing trend to try to force hot companies to become more publicly tradable. And with SPV frameworks as they are today, it's become a lot more reasonable to skirt the regulations that prevent private investors from actively trading private company shares. Then you have to get into the whole, does the company actually want this or not, or are they going to enforce transfer restrictions? But if we take the view that some of these perp facilities that are trying to price Anthropic could be combined with some sort of portfolio margining to create an actually reasonably liquid market for price discovery on private companies, would that, do you think that would be necessarily a good thing or a bad thing for capital allocators and capital markets?
I think in the current kind of structure, I think it's going to be very hard to come up with deep liquid perps on things like Anthropic, because how are you going to hedge that?
Let's say that someone comes up with a mechanism to allow private individuals to portfolio margin and their Anthropic SPVs with a Anthropic perp. So you could run a basis trade where you're short the perp and long whatever holding company you have that is holding a whole bunch of Anthropic shares. Let's say there's a whole bunch of issues with implementation and nuance there, but let's assume that structure kind of works.
But I think there's maybe a second component, which is maybe it's not clear the companies want it, right? Maybe for various kinds of control reasons, and I think probably for Anthropic it's true that the leadership does not want the shares kind of openly traded.
Do you think that we see a scenario where they actually enforce the transfer restrictions? I think it was OpenAI threatened to do that, or it was SpaceX threatened to do that before their IPO?
I think they do, because I think they've kind of view in some sense maybe they lose control if there's free transfer restrictions.
Marcus, you once used the line on multiple occasions, a market for monopolists. Can you explain why you said that, and I mean connect it with this broader theme of sort of power and how markets influence that?
Yeah, I use that term. I run a company called T+. T+ is a lot of things, but really what T+ is trying to do, like kind of the end goal and what we're trying to unlock, is access to inaccessible flows that give certain parties in the marketplace asymmetric edge and give them like more efficient pricing power, and making it easier for that party, for those end parties that are advantaged, to trade with disadvantaged parties in a more efficient way. So just better quotes at the end of the day for the disadvantaged trader. So when I say marketplace for monopolies, I think that crypto is a good example of this. If you take like the Sol market, for example, there are multiple different parties in that marketplace that have different execution monopolies and can use them to get asymmetric edge over the marketplace. So that might be Jump, who has Binance Tier 9, or like maybe even a Binance VIP deal, and they have very good fee tiers on Binance, and maybe even credit lines from Binance. So they can price and trade very well on Binance, and they're good at Sol markets on Binance. But then maybe you have like Manifold, and Manifold has access to, or has really good Solana blockchain execution, so they're really good at buying and selling to LPs on Solana. So those two different people have different execution monopolies on their different corners of the market. So if you can create a marketplace for those two different monopolists to trade against each other, that becomes a very efficient marketplace for anybody else who's participating, because you're always getting very current information on what the actual market clearing price of this asset is in reference to everybody else's asymmetric edges. So I think tying this back to the overall prompt, am I getting into private and public marketplaces, or just?
No, I think that was good. I think that's
okay. That's my context.
Yeah, there we go. I think maybe. Let's go.
Could I ask a question?
Go for it.
Please.
Yeah.
First of all, thank you. You guys are awesome. It's enlightening. My question is a little naive, so be gentle. Okay? So we came off the gold standard in '71, and now we're on the faith of the U.S. government, which we're pretty strong. We're not going anywhere, with all due respect. But the fearsayers of crypto say it's not based on anything. It's just the faith of human beings, which can go overnight, as we know, and run on banks. What's your thoughts?
Yeah, I think that there's a lot to unpack there, but we've traded shells, right? Like we've created economies and markets consistently throughout human history. So I don't think that that's like going away. Whether you exist in the dark ages for a period of time, which would have absolutely sucked to have lived there. We seem to be on a trajectory of progression. Whether you have a belief on what that progression should be, I think that that's up to each individual. But yeah, I think times could get really challenging, but I still probably have faith in like what we do and what we're striving for here. I think the net good is still out there, versus I think there's a real risk that you blow yourself up, you blow everything up, and you don't get a chance to continue to iterate in that. But we've instilled value in these things, and if trust in a trustless system is like important, then these are the things that blockchain really has a strong hold in, where it says if we have a lot of lack of stability in government and societal institutions, if we have this one thing that we can all agree on, then maybe we don't experience these periods of dark ages when things turn over. And maybe that's the hope that I have for crypto there.
I want to maybe connect this with the previous comment. So, I think some things have form natural monopolies. There's a reason why one actor ends up dominating in some kind of activity, and in different markets there are different causes for this. I guess I'm curious, given that, maybe assuming, taking that as the hypothesis, what can we do about that, and also maybe challenge the hypothesis if you disagree. But I think maybe, Ciamac, before we even talk about this, do you think that that hypothesis is true? Do you think it's like a law of nature that in some markets there's always this kind of like concentration of
Absolutely. I mean, I think markets have network effects. Right. If there's n people in the markets, there's order n squared possible, pairings for productive trade. So I think markets fundamentally have increasing returns to scale.
Great. Okay. And so, what do we do about this, right? If you identify some kind of a market, maybe it's block building, maybe it's someone driving the decisions in a particular token. What is there much we can do, or are you sort of delivered to whoever is this monopolist?
Add an auction. That seems to be the solution to
for block building, or more generally.
Or I mean, that was kind of the solution with like sort of PBS. I think generally, like again, you see something that's not competitive, you try to make it competitive. I think, but at a meta level, maybe you just push the monopoly elsewhere into the system.
Adding information can also be interesting, like the Carfax in the car market, for example, or like the gas price tracker apps. Or maybe like propose a whole new market. Like we have gas prices, right? There's like 3 gas stations in the United States, at least chains supplying the actual fuel. You have to pay one of them to exist. That kind of sucks. Maybe the government starts one that's like $1 cheaper. That's like the Zoran Mamdani approach to groceries as well, right? And it's like a little trolly, but also not. Like sometimes you need to shake up the market structure a little bit. Sometimes maybe you add some information. I do think there are tweaks you can make, but there's not a great solution to these network effects, I think. If you look at most markets, how many cell phone companies are there? How many laptop makers? How many gas stations, et cetera? I don't know. Maybe top universities is the exception because it's maybe hard to scale. I don't know.
Okay, and then speaking of scaling, I think maybe MetaDAO is the most exposed to this, but Professor, you were talking about prediction markets before. I think there's an ambition to have many, many more markets. I think many people in this room benefit if that is true. But it's hard to bootstrap new markets. How do we get there? And I think given the day and age, I should ask, does AI play a role in bootstrapping these new markets? I think, Kollan, I'm most interested in your thoughts on this.
Yeah. AI certainly has a place in everything. Like if that's not the case today, it absolutely needs to be a part of your life right now. But I think we started out as DAO tooling, right? Like we started out as like decision markets should be cool, people should show up and trade. That just wasn't the case. And I think that I just come back to pragmatism on all of it, where it's like, okay, well, what do we have here that like in theory could be cool for people, and what problems does it solve? So for us, it was like, rugs happen on crypto all the time, right? This is not something new. Everybody's probably experienced if they've been in crypto. And because we locked the treasury behind this like market-driven thing, we can protect from that, where you don't give the team, like these funds, directly. And so we solve like one problem at a time for that. And the hope there is that you can build enough like market cap or capitalization in this specific thing that it then becomes interesting and gives the like opportunities for more sophisticated capital to move in, and then you get the maturation of the market. But you probably have to find that like one driving factor, and maybe the answer to that is like bootstrapping with additional cash. Maybe that's the point of government, agencies and all these things that aren't necessarily profitable initially, but you can subsidize them. But yeah, like I think it's a unique challenge, and it's probably like specific to each individual like case on any of those things. We were talking outside about prediction markets and low liquidity on the long tail stuff, the sports betting, the low turnaround, low settlement period. Prediction markets seem to be doing fine, but how do you quote? How do you hedge? How do you de-risk any of this stuff on long tail? And I don't know that we have a good answer for it yet, outside of subsidizing with, like cash that comes in from somewhere else.
I think one thing that's interesting is one of the externalities of prediction markets, at least, is this like prediction, right? It's the price, and right now that is not being used. Or sometimes someone will subsidize a market to be able to get this prediction, but a lot of the time no one's willing to do that because in some sense it's a public good. And I think one interesting direction as people who work on privacy technologies and private markets is to try to think whether we can capture some of the value of this generated prediction and use that to stimulate the market, and not have to rely on people gambling to subsidize everything. So I got a 2-minute warning 30 seconds ago, which means that each of you have 30 seconds. 29, 28. And so it has been a very wandering conversation, but that's good. I think we're in a time in which we are, in some sense, having to go back to the drawing board and explore what's interesting and what's new and plot out many of these new directions. I'm curious if the three of you have some last words.
I mean, just to riff on your prediction market thing, I 100% agree with you. I think that's the main challenge in prediction markets right now is the free rider problem on the information that they elicit. And I think it's really challenging because how can you have a mechanism? So you want a mechanism where people don't see the price, but then they can trade? How's that going to work? I don't know.
TEEs.
Yeah, maybe. Yeah. I don't know.
Well, actually, this reminds me of like a troll proof I have of why you can't have zero MEV. You can prove that it requires you to be making trades on Uniswap and not only not know the price, but not know whether your trade executed or not at any point in the future. If you can have those things, you can solve MEV. So maybe you can have fair prediction markets too. My closing thought, I want to bring it back to the government a little bit, the idea of the US government and believing in it, the question we got. I think that is one example of how we can kind of meaningfully change things with markets, right? Crypto is a market. Some person or team coded it probably in their basement. And now the kind of power structure of things is a little bit different. It's not completely different in the way people got very excited about 20 years ago, but it is a little bit different in a nuanced way that would kind of be hard to predict. So if we're going back to the drawing board, maybe we can reflect on what we've done well or not well so far.
Yeah, I think it's just exciting to like keep working in it and like see stuff come up and see experts dedicate resources to, writing papers and discovering all this stuff. And I think it's like still inspiring and still fascinating, and the sky's the limit on what we've got going on here. So I'm excited.
To the moon. Thanks, guys.
To the coffee break. What's next?